As usual, another great guest, but a quick diversion. You'll notice that our full name is the Marketplace for Health, Wealth, and Freedom. Well, let's talk about your health for a moment. If you'd like to escape from the stranglehold of insurance and be able to see alternative doctors or go across state lines for care, then you definitely need to take a look at patientempowerment.mpb.health and see if that's the fix you've been looking for. Now, let's get back to the show.
And welcome, folks, to Freedom Hub's weekly health webinar. Sometimes we call it Free Market Cash Patients. I don't know if we're going to stick with the recent name I started to use, Health Biz and Politics. But today is an exciting webinar because, when I was back fighting Hillary Care in Congress in the early 90s as a staffer, John Goodman introduced the health savings account to us, which we grabbed onto real quickly. And I still love it, but for a different reason, because of Elliott and the HMA. And, the problem has been really pointed out by the advisors for the bigger self-funded companies whose blue-collar workers weren't sufficiently funding the HSAs to make them very useful for the out-of-pocket that they were touted as the solution for. They have become a godsend to people with a bit more means as a tax shelter. If you start in your 40s socking away $3 to $7 grand a year, you can build $100 grand plus, which you can use for retirement, out-of-pocket costs, long-term care, Medicare gaps, or a second house, vacation, or a new boat. And to help folks max out their HSAs, I really am encouraging them, and so are some friends of mine who deal with bigger groups, because Forbes featured us as a great solution for individuals and small groups. And for those with out-of-pocket costs, your kid's gonna have braces, you're gonna have a baby, you want an elective surgery, you got maintenance meds, chronic disease, or you're gonna have to pay your deductibles and co-insurance. A lot of us are starting to encourage this new account that doubles your money over 3 years. It's an HMA. And let me just give you a quick price before we turn it over to Elliott. Basically, if I can show my, let me see, hide. So if you went to my site and you were in your 30s or 40s on your own, you could pay $225 a month with a pretty high out of pocket, $5,000 IUA. And I'm going to keep it here at the high out of pocket. I mean, we have more expensive plans for a lower out of pocket. $2,500 or $1,000. But sticking with this example, whether insurance or sharing, those are both third parties. And in the long run, a lot of folks are going to start to agree with this. You want to keep these third parties out of your life and just be there for major medical. For the first dollar low level stuff, your urgent cares, your tests, small surgeries, this plan here is going to allow you to max out your HSA. And we have cheaper plans without the HSA if you don't really want one. But keep that $225 amount in your mind. For $84 a month, you can double that over 3 years to $5 grand. Now you're bulletproof. What is that costing you? 225 plus 84, 309 a month. If I got my math right, if I used the right plans. But simply, for a few hundred a month, you've got protection from the first dollar to no upper limit. So why are you even bothering with insurance, especially given that they impose networks on you that exclude the best doctors you want if you get cancer or heart attack? There's no networks for sharing. So everyone I talk to, don't be silly. Cut that major medical cost in half, add an HSA to build a boatload of funds for retirement, and then for real out of pocket, use the HMA. It is such a good deal. And that's where, Forbes Goodman featured our combo sharing in HSAs, and he also featured HMAs. And with that, I'm going to turn it back over to you, Elliott. And let me figure out how to return to the meeting here and stop sharing. So Elliott, why are so many agents like me helping folks learn about the money doubling account for out of pocket? What are you seeing recruiting all these agents nationwide, What's going on here?
Well,
This is amazing.
Well, we're creating a huge movement. We have 27,583 HMA sales reps right now. We are creating a movement. Why? Because we are the best value for paying healthcare expenses. Big insurance doesn't want you to know that claims aren't that costly and they aren't that frequent. So not only will HMA double your money in 35 months, but your average ROI on claim spend is around 67%, because once you incur claims, second dollar claims are not as expensive. What happens when you get older and you have health insurance? What do? They kick you off the health plan. They increase your rates. What does HMA do? We give you a better value to buy back in. So, initially it's $2 for every dollar paid in for our crediting. As you fill back up your bucket and your account, you're getting up to $3.5 for every dollar paid in. So there is no better value in the industry. Before us, the HSA was the best value for paying medical expenses. I love the HSA. It's a great tax shelter. It's a great, it's a great way to put money away. It's just simply not as efficient as paying claims with a health match account. We also cover elective procedures as well. We are changing people's lives. I'm meeting people all across the country who are coming up to me with tears in their eyes and tears of joy because they're able to get procedures done that they could never afford to do. Like reconstructive dental. I mean, what dental plan is going to pay first dollar to get your teeth, to get brand new teeth put in? So we are changing people's lives. We're helping people see. People are getting the cataract surgeries that they need. We're restoring people's confidence back with the plastic surgery and the other elective procedures that they could never afford. And, I always say, Uncle Sam will give you a tax break with the HSA, but he won't pay your medical bills for you. And that is a huge point. You put $4,900 into an HSA, you get a little bit of a tax savings. Great. You put $4,900 into an HMA, you're getting $10,000 of paid up medical benefit on your HMA Visa debit card. Now let's say you have a $4,600 claim. You only have $300 left in your HSA. With the HMA, you'll have $5,400 left. You'll start paying in $140 a month for 11 months. What's that, like $1,500? And you'll buy back that $4,600 of spent medical benefit. So $1,500 now to buy back $4,600 of medical benefit. You would have to pay a lot more money back in your HSA to get that money back. And one of the things we're finding is the average health matching account balance is about 5 times larger than your HSA balance. So we're solving a lot of problems here for our consumers that are struggling to pay their out-of-pocket medical expenses, which is a huge blessing that we're able to bring to the marketplace. We have people that are loading up their their health match accounts right now, and then they're going on to Medicare, and they're better prepared for Medicare than they would be if they bought a Medicare sup, because Med sups have lots of gaps in them. And I always tell my clients, and I tell my brokers, if you want to lose a client, sell them a dental vision insurance policy, because they'll always disappoint you. It will always disappoint you. And there is a huge problem. And John Goodman actually wrote about a new article about the HMA in Forbes on how the government abuses the elderly, not just with taxes, but with out-of-pocket dental and vision costs. And the HMA is the only solution right now that we see in the marketplace that is able to, address this huge issue we have with seniors not being able to, get their teeth fixed, their hearing aids, their eyes. There's so many out-of-pocket expenses that Medicare just simply doesn't cover. So, we are transforming the healthcare marketplace right now, and I'm just so thrilled by how everything's gone with our product. The HMA has been in the marketplace for 7 years. We have not changed our rates once. We have not increased our costs once. Look at what's happened to insurance. Insurance rates have gone through the roof. You know, they skyrocketed. Look at medical trend and medical inflation. It has gone out of control. The HMA is now proven that this is the only product that's proven to offset Milliman's Gretzky-Long medical trend curve. So, you know, our multiplier, which grows at 10% a month, drastically offsets Uncle Brandon's medical trend, his inflation. So that is really big because, you know, inflation is no joke right now. I believe it was what, 8.9% for the month of April alone. It's crazy. It's out of control. So the HMA is here. It's here to stay. We've had wonderful success over the last 7 years. We've actually just made, in the last 2 months, we've made the HMA inheritable, retroactive, free of charge to all of our clients. What healthcare product says, you know what, we're going to make a change to our product for the better of all of our consumers? And on top of that, we're not going to charge anyone for it. You know, that's something else I'm really proud to be a part of because we're truly giving back to all of our clients, and our clients love us for it. And, you know, since the last 7 years, it is unbelievable. I'm almost embarrassed to tell you how much, I'm almost embarrassed to tell you how many of our clients we've kept in the last 7 years because it is truly unbelievable. We have retained 91% of our clients since day one, since we rolled out our product 7 years ago. That's unheard of. That's unbelievable. 91%. You know, in the health insurance industry, one of the main contributors to cost going through the roof is that churn, that 5-year churn that you see. You know, medical trend drives costs up, and people are always shopping for new plans. You know, insurance coverage is lacking. It's shrinking. Deductibles are going up. But, you know, our clients are loving their HMAs. They're keeping their HMAs. Over 40% of our clients within the first 24-month period will increase their HMA contribution. It is unbelievable what we've built here. Charles, I'm going to push it back to you because I'm running out of hot air.
Elliott, take a break. Take a sip of that drink you have there.
Yeah, absolutely.
Do you want to share your screen, or do you want me to share my screen? Why don't we go through that ladder?
Yeah. If you want to share your screen.
Okay, I'll do that.
That would be great. You go to HMA.
Yeah, so let's go to the how it works. Balance growth explanation. You see that, Elliott?
Yep, absolutely.
So let me see if I can't get a. So, you know, maybe I'll take a stab at it, or do you want to explain it?
I do this all the time, so I should be able to knock it out of the park.
All right, go ahead.
Well, guys, this is really important because, you know, insurance, let's take a step back and let's talk about insurance you know, insurance, guys, is a one-sum game. Insurance is priced so that 99% of the population has to lose in order to pay for the 1% that actually win, right? HMA is priced and built completely different. The HMA is priced and built to be a win-win. It's a win for the consumer, whether they incur a medical expense or not, because their account balance is growing. And it's a win when they incur a claim because they're saving money on that medical claim. So the HMA is the only true win-win in the healthcare market right now. And also, guys, by the way, we also cover pets. So that's just another side note. We cover pets with a very similar type of plan. So we'll look at Woody here. As y'all know, to add a family member or spouse, it's the first dependent's $5, the second dependent's $10, and the rest of your family is free of charge. So the max you're paying for your entire family is $15. We're going to look right here at Woody as just a single character. He's paying in $140 a month. Now, first month, Woody's underwater. Woody's paid in $140. Woody only has $110 available. So Woody's first few months of owning the HMA, Woody's underwater. Why? That protects us against adverse selection, frequent claim filers, because after all, guys, there's no medical underwriting with the HMA. Nobody has to prove health. The HMA is fully community underrated, meaning your 75-year-old diabetic pays the same amount as someone who's in perfect shape like me. No, I'm just kidding about that. But, you know, we all pay the same price. Month 8, you can see Woody has paid in $1,120. Woody now has $1,160 available on his HMA debit card. Woody can use his HMA anytime he wants. We always tell our clients to at least wait 12 months or as long as possible before they start using their HMA to maximize their savings. Month 12, Woody's paid in $1,680. Woody now has $1,980 available on his HMA prepaid Visa debit card. Month 24, Woody's paid in $3,360. Woody has $5,400 available on his HMA debit card. Can you scroll up a little bit, Charles? Thank you very much. Month 35, assuming no claims, Woody has paid in $4,900, and Woody has $10,000 on his HMA prepaid debit card. Woody now has reached his paid-up threshold. What that means is Woody is no longer paying in the full $140 obligation. Woody's only paying in $40 a month in maintenance fees. What health plan says, you know what, we've had enough of your money. We're going to take less money from you because you've helped keep our pool healthy. That never happens anywhere else. The Blues, the Bucas, they never tell their clients to pay them less money. I promise you that. There's not one health plan out there they have that says, pay us less money because you were healthy and you didn't use our program. So Woody's now paying in $40 in admin charges a month to maintain his $10,000 paid up account balance. It would take Woody 10 years of not paying any. It would take Woody 10 years of not having any medical expenses to make that $40 monthly charge a bad value. Because the clients paid in $4,900, they have received $5,100 in matching from us. So, you know, you divide that 40. Multiply that 40 times 12, divide it into 5,100, it's like 10 years. So anyways, let's look at what happens when Woody incurs a $4,600 medical expense. You subtract the $4,600 from $10,000, that brings Woody down to month 24, where there's $5,400 left in his HMA account. Woody would start paying in $140 a month for, 11 months? Which is $1,540 to buy back that $4,600 medical expense. So when he's buying, so you can see when you're incurring claims, your ROI on claim spend is going up. It's going up a lot higher than an initial 2-to-1 because Woody's getting a significantly higher crediting for that medical expense. And this is another reason why we don't lose any of our clients, because there is no cash value to our plan. You can only use the HMA for medical expenses. So, you know, there's always gives within every plan. Our give is there's no cash value. It can only be used for medical expenses. And then Woody reaches paid up in about 11 months. This is why we don't lose any of our clients, guys. This is why your clients will always love you when you sell them an HMA. When they log into their account balance and they see that match that they're getting from a product you sold them, it's not only is it going to give you credibility, but it's going to give them the warm and fuzzies, and it's going to give them the peace of mind that they deserve. Back to you, Charles.
Yeah, thanks. So, you know, sometimes it helps for people to hear from different sources, sort of like hearing things in stereo. It might sink in a little better. So just to recap quickly, you know, how I characterize this great image, which really explains it. And Elliott, you can comment afterwards. Again, Elliott mentioned the underwater aspect in the beginning stages of your HMA. So, you know, you could actually get, we'll show the prices in a second, a more expensive HMA to build up the account balance faster if you needed some help with out-of-pocket sooner. And we'll review that, which HMA level do you choose? To me, it's a function of what out-of-pocket expenses you expect. The $10,000 prepaid visa is a popular one because that's going to cover you for most of your unexpected hospitalizations and be there for your more routine stuff like cavities, tests, prescriptions, urgent care, that kind of thing. Sometimes you might want even less if you don't expect much out of pocket, which would be $84 a month, which was the amount I used in my example, which when combined with sharing for major medical, you're paying a total of $309 a month, which is outrageous to have that kind of protection. So,
but Charles, Charles, I'm going to bring a good point. 30% of all HMA sold are above the HMA 20,000 because of those expensive dental costs, and deductibles now have gone through the roof. What's the family max out of pocket? It's like 15 grand now.
Yeah.
So we're seeing a lot of high HMAs. People are preparing to go into Medicare now and buying larger HMAs. I'm sorry to interrupt. Please go back. Sorry.
Well, let's go right there then. So when you see the price options, it's a lot of numbers. So do you want to kind of go over the conversation you have with people? Because sometimes I'll start with just a simple 84 a month to cover that out of pocket that we offer, the $5 grand. More senior folks may need more help. They may need a 15 grand, 20 grand HMA.
If you have a family, Charles, you're right. If you have a family and you have kids, they're getting ready to get braces. You got to plan for that. Or my situation, my wife, she wants the mommy makeover. HMA covers the mommy makeover. That's one of the reasons why we see people, maybe starting at the $84 a month and saying, wow, I have contacts I spend $1,000 for a year. I have all these medical expenses I didn't know that I had outside of my health plan that, I want to save money on. So we have a lot of our clients, going to the 20, 30, 40, 50, and even $60,000 plans. Dental is extremely expensive. As we get older, our teeth tend to fall out. It's $25,000 right there. Teeth are expensive. Hearing aids are expensive. Eye surgeries. There's a lot of procedures out there that are that isn't covered with your health plan. It's considered elective. So I'm not just saying, that's just with health plans in general. I'm not saying any in particular health plan. Everyone's health plan is different. But there's so much out there that isn't covered that we're here to cover with the HMA.
And Elliott, staying on that, those more expensive out of pocket that you find out you need a stronger HMA. Goodman's article at Forbes did argue that the HMA was a better supplemental than Medicare, Medigap supplemental policies for a variety of reasons. You want to kind of go into that? Because, you're 65, you're looking at all of these confusing Medigap policies, part, A, B, C, D, E, whatever. They could do better by just getting a nice fat HMA, couldn't they?
Absolutely. And they can plan and prepare for it while they're still working. While they're still making money and in their working years. Absolutely. Well, whether it's any kind of Medigap policy or it's a hospital indemnity plan, there's always a gotcha with those plans. There's a gotcha where there's deductibles, copays, limits on usage, networks. HMA, we don't have any of that. It's cash. You swipe your HMA card, claims paid for. A lot of these HIP plans, hospital indemnity plans, they have very complicated reimbursement plans. You swipe your HMA, the dentist, the medical claims paid for. We don't want your grandparents having to fight with an insurance company only to be rejected that, oh, I'm sorry, it's not covered, or to fight with them tooth and nail to get something, a $75 claim reimbursed to them. So the HMA is designed to make everything smooth as possible with all your clients.
And starting with 213D of eligible expenses for the HSA, because you have more discretion, given your experience with your pool, your sales, your different levels from Milliman, you can pay for more things than an HSA, like electives and a possible long-term care rider coming on. Talk about that flexibility you have to respond to what consumers really want.
Absolutely, Charles. John Goodman said it best. It's so funny because sometimes, when you build and develop a product and you're working, you're so close to the fire. We're so close to the fire. The smoke confuses you, and you don't see the obvious. I love what John Goodman said. Is when he said the HMA is like the Roth HSA. He hit the nail right on the head. This is like the Roth HSA. Your money goes in after tax, grows tax deferred, and can be used tax free. I absolutely love that. And because this isn't a qualified account, according to the Affordable Care Act, the HMA is considered a non-qualified accepted benefit. Because it's non-qualified, we can use the HMA for elective procedures that you really can't with the HSA, like your plastic surgeries and I don't know if you can use it. You can use dental implants for HSA, can't you? And facelifts, or no? Facelifts, I know you can't. The HMA, you can use it for just about everything, actually.
Yeah, and that's going to be something that you guys have the discretion to continue to expand.
Absolutely.
Even with more integrated care, the future of healthcare, that's going to be something you guys are going to face. And of course, you have the overutilization worry, so it's going to be a balance between you're overutilizing, we got to knock this back off, like chiropractor. Let's put a dollar limit because folks are going to get their adjustment 10 times a month. So you do offer a chiropractic service there, but it's a dollar limit, right?
Yes, and we're going to look to increase that dollar limit as we get more experience. Also, too, I don't know if I've made this announcement yet, but this would be a great time to do it. We're currently working on HMA. We're going to call it the Health Matching Account Freedom Protector, which is going to be our version to use the HMA to be covered for long-term care and home health costs. We're going to have a maximum account balance of $300,000. There'll be 100, 200, and 300,000 paid up levels. You'll be able to pay it up within 5, 10, 15, and 20-year periods. It will be guaranteed issue. It's going to be inheritable. And it's going to be the best value for paying medical expenses. Your money's going to double within the first 5 years, and it's going to triple from 5 to 20 years. And there'll be no age limits, no restrictions. You'll be able to use it for home health, long-term care. And it's going to be our rendition of the HMA, but specifically for long-term care and home health needs. And I'm really, really fired up about that. We're building it. The actuaries just finished, and it looks phenomenal. So as you know, guys, long-term care has been a huge failure.
50,000.
That long-term care market's been a huge failure. I don't know if there's any insurance companies left. I know Mutual has pulled back. Transamerica's out. It's really been a race to the bottom. So as fat hogs get slaughtered with our new HMA Freedom Protector, our multiplier is going to be low. It's going to be, it's not going to, there's not going to be any immediate gratification. There'll be a 2-year pre-existing period where you have 2 years before you can access any of your benefits. And as you're paying in this new plan that we have, it'll be inheritable. God forbid something happens to you and you don't use those proceeds. And I'm really fired up about that because that's another valuable product that our industry needs. We need to be building more products that bring more freedom to the consumer back into this industry.
That's incredible, and we'll have you or Jeff or someone back, later to talk about more long-term care specific, because that is huge. People are going to want to know about that because I think we all have seen the articles. On average, a retiree is going to face how much in long-term care exposure? $200,000. My goodness.
It's like 240,000. You're right, and it's weird because the average life expectancy at home, I believe, is like 4 years, and in nursing home confinement, it's like 2.5, 3 years. So it's going to be a plan to really address those issues, and it's going to be more of a savings product, whereas the benefits will roll on to your next beneficiary, your next of kin. So you're not losing this money you're putting into this plan.
That's great. And when folks talk about losing money in this plan, keep in mind, HMA is really a supplemental in cash, only it's better, more flexible, and a better value for your money. So when folks realize that, then they go, oh yeah, I get it. That's why this is so revolutionary. And I know you're working with some mutual friends of ours to really help a big problem in healthcare, and that's getting the lump sum bundled fees for these more expensive prices. We're talking about some of these, cash vendors.
Oh, absolutely. Savos is coming in today, actually. Savos is coming in today.
That's what I'm talking about.
I love Prater. I love Bill Hennessy. I really love those guys. And you're absolutely right, Charles. I can see us adding those features into our plans to help our clients become better consumers.
Yeah, we have Healthcare Blue Book and Prater and soon Savos, and there are others out there, but people should know that's the big unfinished question is how do we disgorge all the prices involved in procedures to get an advanced bundled price to allow for the competition that we need, to get that supply and demand curve, working. Charles, you've had your hand up for a while. Go ahead, sir.
Well, you've answered my question, and I thank you. That is about how you do the lump sum. That really the question's been answered. I understand.
But why don't you go ahead, Elliott, explain that one more time for folks with out-of-pocket exposure pretty soon. Agents will want to counsel them to get a more expensive or more powerful HMA up front for the first year and a half or so to get that increase in benefit going faster, and then maybe lower it later.
Yeah. So one of the things we really want with all of our clients is to maintain the highest return on investment with their HMA contributions. So we don't want our clients decreasing their HMA at least within the first 2 years to maintain that level of affordability for our clients. Because when you purchase the HMA, it shouldn't be a race. It's really for the long haul. So we want our clients to have an HMA product that best suits their needs, so they're not doing lump sum dump-ins and then scaling backwards. We want them to be paying in and be at a comfortable amount for their entire life, and then maybe increase it. Because if they pay too much and don't use it, then it's not really helping them. It's not really helping them that much. If they pay too little and don't have enough benefits, it's not really helping them. So I think it's key for clients to really think about what are their foreseeable healthcare costs and where are they going, and to be real about it. Because especially if you have a family, because I probably spend $5,000, $6,000, $7,000 on healthcare costs, and I have a pretty healthy family. But that's just in doctors, dentists, and other routine care. If you're expecting a child, that's another reason to have a large HMA. But I always recommend at least starting at the $10,000 level, because you really don't know your healthcare bills until you. And as we're getting older, one thing we do know is that they are going up. And with medical inflation and medical trend skyrocketing right now, it's really important to purchase the right level and be consistent with it. Yeah.
Okay, so that conversation agents have with prospects or businesses, because we haven't even discussed your group HMA, that can go from how many employees to how many employees? Can you do a group HMA?
Yeah, I mean, now actually HMA list bill is fully automated, so we can do 2 on up to 2 million or 2,000. We have small employers, we have extremely large employers, large associations, all a part of the health matching account program. We also have the HMRA, which is our 105 HRA rendition of the HMA, which is a really successful product as well. It works the exact same way, but because it's a 105 plan, it's all employer funded. So that's something else to keep in mind. But the HMA in the employer setting is phenomenal because it's like a 401k match that the employer doesn't have to match. So it really gives employees the warm and fuzzies because one of the things we're seeing now is we're seeing a lot of people breaking down group plans. You know, a lot of small to mid-sized group plans are being deconstructed and they're going elsewhere. They're going to exchanges. They're going to Christian ministry plans. They're going to all these med share plans, right? And they're adding, with that savings, they're adding the HMA onto it. So it's like, so now employees are getting a better value because they're getting more benefits, better benefits for a lower cost than their traditional group ACA fully insured health plan.
Well, that makes sense because under groups, you know, you see here, we have a list bill too, up to 49 employees, but we can do larger on a case-by-case basis. So if you can list bill as well, man, that's really easy because all the employer is doing is paying for everyone's cost. It's not really a true group plan, so the overhead hassle is low. So that's fantastic. That's fantastic to realize. Joe?
Yeah, thanks. Elliott, I'm curious, like, you know, you're really disrupting the industry here a little bit. And so I'm curious if the more future plans for being able to continue to disrupt the industry in terms of insurance has a model where the consumer basically goes through testing that either says, hey, I need to have a surgery or I'm going to get a pill solution. But there's a lot of new, you know, functional medicine doctors that are out there and chiropractors who are testing people on different levels and acupuncture. Like, do you see the future of the company being able to address some of these other issues that are out there? Or how are you currently addressing these issues for testing?
Well, you know, we also own an insurance company as well, the National Prosperity Life, Health, and Accident Insurance Company. So we're very conservative by nature. For us, it's all been about experience. You know, the commission we paid on our product has been getting better and better over time as we get experience. Where we've been with chiropractors has been getting better. We're going to be increasing our limit to what you can use at the chiropractor here very shortly. We went to our new HMA debit cards, and just last month alone, we stopped $270,000 of fraudulent activity from going to our new HMA Visa debit card. Because technology is getting better, because we're getting better experience, I can see us making maybe a carve out. I'd like to make like maybe a carve out, or maybe add an extra fee so people could have unlimited chiropractic and maybe unlimited acupuncture and new age medicine and alternative medicines, because I'm a believer in that personally, and I'm always looking for solutions to be able to better serve that underserved market. But it's all about actuarial experience, and it's about, you know, keeping the pool healthy for everyone. So it's a delicate balance. It's really fascinating. But I definitely see us taking big steps forward at the rate we're going now, with our new debit cards, with the experience that we're getting now. Like I said, I would like to see chiropractic go to $250 a month, and I think if we take our chiropractic limit to $250 a month, maybe 3 usages, 4 usages, I think we'd hit the nail on the head. But it's, you know, with these smart debit cards that we have now, we're building in all this new code. Because as you remember, my last debit cards, they turned off chiropractic on us, and we do mail-in reimbursement. And that's part of the reason why we switched to the new debit cards. So as our IT is building, that's one of the next things I see as building in the future would be greater accessibility to alternative medicines.
Wow,
That's
that is
awesome.
huge news. Because you know a lot of us are in this healthcare game to change it, and you know, integrative care is got a huge upside, and if you guys get ahead of that, that's well, that's to be expected. You guys really are ahead of the curve. Long-term care, this is fantastic, Elliott.
Hey, and also pets too.
Pets.
Don't forget about pets, because pet insurance is a complete ripoff. It is terrible. You know, there is no, you know, people aren't having babies; they're having fur babies, and pet insurance is a ripoff. It's terrible. The PHMA is bringing those conservative, freedom financial principles that y'all hold dear into the pet world, which I think is really needed.
Absolutely, and I'll find my pet HMA link and put that in the chat when I find it.
Oh, it's a very punny business. You know, the benefits roll over from pet to pet, even though your pet can't roll over. The benefits last forever. Get it? Forever, because you know there's a big issue that we solve there, but the LTC home health product, that's going to be the next product that we launch. We started building that about 7, 8, 9 months ago, and we're nearing the home stretch with that, and I'm hoping to have a good launch with that in the next 3 to 4 months.
So speaking of bundled prices with Savos and other bundled vendors out there, Elliott, you know, it's the hospital employed doctors and specialists that are looking for some hope that they can get more independent cash paying patients and really fix the system, which is so institutional focused. And Dr. Taylor is one of those ambulatory surgical center entrepreneurs. John, it's good to see you, sir. Go ahead.
Good to see you, Charlie, and thank you, Elliott, for your presentation. A lot of good surprises in there today, you know, in particular alternative care and long-term care, and, you know, perhaps home health care is just really awesome. And my specialty is plastic and reconstructive surgery. So to hear that cosmetic surgery is covered by this too is also could be an awesome product for us to pitch to our patients. But I actually had raised my hand before you started touching on this. It was something that I'm also particularly interested in, and that's packaging this for small employers. You know, I'm talking about employers, you know, 50 or less employees. And in particular, I work in New Jersey, which is a state where we're required by law to offer at least an MEC insurance piece. So what is very common for us is to offer our employees an MEC insurance plan, high deductible, linked to an HSA. So what I'm also interested in is looking at kind of a package that between, you know, the medical cost sharing plan like Charles offers, along with the HMA, what kind of benefits small employers are looking at that we can pitch this.
Elliott, can I take a crack at this first, and then you can comment?
Please, please, absolutely.
So here's the price, John. You see that 309?
Yep.
So as you know, what John, let me make sure I'm sharing my screen here. What John Goodman praised was our combo of HSAs with sharing, and how we do that is via a MEC. So embedded in our secure plan for self-employed individuals or small groups up to 49 with a list bill is that MEC, so they get the free preventive. It's got the appropriate deductible allowing for an HSA, And then that 309 amount is with the $84 a month HMA. So there you go. And you heard Elliott mention the list bill, which is a godsend. For those that aren't in the business, list billing is a godsend for small groups because, it's not a true group plan. It's just you get a bill, you pay everyone's cost, and then you deduct it from payroll. So it's free for you, for the employer. If you want to make your employees whole, you can give them a bonus check every month of a certain amount. There are different ways to help your employees. But between Elliott's list bill and our list bill, 309 is the price. Now, that doesn't include what you've funded your HSA with. That's on top. But you don't have to fund the HSA. But you can if you want. But you want the HMA because that is better for blue collar folks who aren't funding their HSAs. With the automatic HMA payment, they're doubling the money so they have that prepaid visa when they do get hurt, urgent care, or for you, if you have some plastic surgery they need for a serious accident or something that they were born with, you saw the amounts. Maybe they need a $30,000 HMA. So, what are your prices, John? What's the range?
Well, for like a Horizon plan in our area, high deductible, either employee and spouse or family plan is typically $1,200 to $1,500.
No, not the plan costs. What do you charge for surgeries? What's the range?
Oh, I see.
$5 grand, 50 grand.
There's a pretty wide range, but I'd say on average, most cosmetic surgery procedures are somewhere in the 10 to 15 grand range.
Okay, so if your customers can plan out their surgery, they can pay $198 over 3 years and double that to 15 grand. So that's the play right there. You discuss what their out-of-pocket exposure is going to be, 15 grand. Okay, you need $198. And by the way, your HMA can cover everything else out of pocket, including dental, urgent care, prescriptions, et cetera. Elliott, want to comment on that, the list bill approach for small groups?
Yes, I will. Since my mother, she allows me to make jokes and talk about her plastic surgery. Since my mother looks like she's the same age as me now, she has an HMA. She has an HMA 60,000. And one thing I will say is, if someone says, and Doc, you're gonna love this, if someone says that they want $15,000 in surgery, I would not recommend they buy the HMA 15,000. They need to at least buy the HMA 30,000. Why? Because a year after they spend that 15,000 and get initially what they want done, Father Time has a cruel way of bringing up other procedures that they want done. So they're going to want to get back to their paid up status, paid up threshold after spending that 15 grand within at least a year. So it'll give them at least 9 months, 10 months to recover for their next procedure. So
yeah, they get hooked. They get addicted.
They get hooked. That's exactly right. And there's care credit, which HMA is the exact opposite of care credit. We are care debit. Instead of costing your clients more money to finance their charges, they're doing it backwards, and we're saving them money on those medical expenses. So just like my wife's, like the mommy makeover she wants done, it's like $27,000. Fortunately, I'm on the HMA 60,000.
One other small technical question about the employer offered plans or the list bill. Is there, in particular for the HMA, in those early years, are there vesting options for that, or does the employee own the account from the get-go?
So with the HMRA, if you have a 105 compatible health plan, you can add the HMRA, which is 100% employer funded. If an employee leaves, a portion of the funds gets spread equally to all active employees. Okay. The HMA, the HMA is a voluntary benefit, or it can be employer funded as well, and that is portable with each and every employee. I'm sure in your employee handbook, I don't know how your benefits and HR work, but I'm sure you can add some golden handcuffs to that plan. Like, I will fund this for you for for 2 years, given you do this, this, and this. There's all different ways to fund the HMA to really bring home, good employees.
That's the
and
group.
promote good employee behavior.
That's the group HMA, but with the Lispel HMA, that's the employees, correct?
Yes. So the employees can fund it, and the employers can also fund it as well.
But it's portable in that when the employee leaves, he can take the HMA with him. Because
that's exactly correct. Yes.
Yeah, that's the thing with sharing too, Lispeling. I'm enrolling each worker individually, and the boss is just getting a bill once a month. So it's very simple, right, Elliott? The simplicity.
Yep, it's very simple. And the craziest part about all this, which is unheard of in any list bill environment, is the employees that purchased and own the HMA, they take it with them. They don't cancel it. They keep it, which is, to me, it's the biggest honor ever that, hey, this benefit was offered to your employee, and your employee is going to keep it after leaving you as an employer, which, I'm just honored,
Paul Cholak and Rick Willard had questions in chat. Do you guys want to unmute yourself and ask those questions before Joe does? We're almost out of time.
He answered the questions on the alternative care. That's the questions I have.
Okay, so just to rephrase it, you already can go to chiropractors under a certain dollar limit, and they're working on a carve out for integrative natural care in a bigger way as they experience, as they gain experience on what they can afford. Is that right, Elliott?
And also, Charles, it's also about MCC coding. So not only, carving it out isn't necessarily going to be that big of an issue. It's paying for it because we're limited with merchant category codes, and we don't want to open ourselves up to fraud. So if we were to open that up to a few $100s of integrated care a month, which actually like that, it would have to be initially on reimbursement, mail-on reimbursement until technology caught up, because we don't like medical miscellaneous. Medical miscellaneous code has opened us up to a tremendous amount of fraud. And
yeah, that makes sense.
And you know what? I'm going to ask, and I'm going to put that on. I'm going to take a note. I'm going to take a note right now of when we can get that done.
Hey guys, Freedom Hub is influencing the future of healthcare live.
Absolutely. Absolutely. I love that. I love that.
Rick, did you want to unmute yourself and ask a question, Rick?
Yeah, Charlie, I just was wondering about the lump sum nature of moving money from a 401k or an IRA for the long-term care.
I can answer.
Go ahead.
So with the HMA Freedom Protector, you will be able to move over lump sums. We're going to have a 5-year paid-up threshold. Our contribution levels are coming back for as little as $143 a month to as high as $1,900 a month to be paid up within 5 years. So if you have a big lump sum and you want to move it over to the HMA Freedom Protector long-term care option, you'll actually be able to do that and fund it and pay it up within a 5-year period.
Yeah, that was common years ago with a company, Golden Rule. They set it up where you could structure your payments out of your IRA, but have immediate benefit.
Yeah.
Let's hear it for Golden Rule. Pat Rooney, he was the original HSA guy, Capitol Hill, early 90s, old company. Fighting Hillary Care.
Everyone loves Golden Rule. I've heard nothing but wonderful things about them. And I heard the ACA killed Golden Rule, right?
I did. Well, United Healthcare killed Golden Rule.
Oh, okay.
They bought Golden Rule short term.
Oh, I wonder. Well, it's funny. Yeah, all the big guys, they still don't even notice us. They don't even notice us. And because we have patents and trademarks, we're protected. I don't think anyone's going to be duplicating us in the near future.
Elliott, one side here. I've been reluctant. Charles will tell you, I've been reluctant to jump on the HMA bandwagon. It just seems too good to be true. And having the Milliman backing and Goodman's, and not only Charles and Joe's support, it's looking better and better. And you're adding a lot of the bells and whistles that I think people need. So.
Thank you very much, Rick. Time has been the best judge of our program. We're not a fly-by-the-night company. We also own an insurance company as well. A National Prosperity Life Health Accident, Life Health and Accident Insurance Company, where we're in the group market and we're expanding to more states now. So we're not a fly-by-night company. We've been doing this in the market for 7 years. We have a flawless track record, thank God. And that's really been the best testament, is just time and our track record, because that's what really separates, the men from the boys. It is how you do in the field out there and how you service all your clients. So
one of the concerns is reserves, and a lot of people that are know-it-alls and think better on subjects like this ask, what are your reserves? What if it happens to go belly up? We get that all the time.
Yeah, absolutely. And see, that's why I own an insurance company. We tried filing the HMA 8.5 years ago as an insurance product. That's why I own an insurance company. And I work closely with the NAIC. Each insurance commissioner in all 50 states agrees with Texas that the HMA is not insurance. Where's the risk? That's what they say, because the regulators know the big insurance companies are ripping people off on risk that's not really there. And when you think about it, we have the optics to be too good to be true. Why is that? Because the spectrum of benefits we cover is far wider than insurance. The accessibility to those benefits is far easier than insurance. But here's the catch. Our multiplier is far less than insurance. I could pay a Blue Cross Blue Shield premium of $1,000 and have a $10 million claim tomorrow. A $10 million claim, So HMA is not priced that way. Our multiplier, at best is 3.5 to 1. Gap insurance is like 6 or 7 to 1 right out the gate. So we're priced totally differently than insurance. Our subsidiaries go under examination, right? When our carrier goes under examination, departments of insurance could change their mind, make us insurance. Who knows? All we're trying to do is be compliant and do the right thing by our clients.
I do a lot of Medicare business, and dental is the biggest pain in the ass. Everyone wants dental. They're not satisfied with the great rich benefits of the Medicare program. They want dental. So this is right up their alley. We are the only solution. That's why we are the most diverse and widely sold product on the Integrity platform. Integrity loves us. Every Integrity office offers our products because they love what we're doing. There's nothing else out there. Yeah, Integrity
absolutely.
Marketing does?
Absolutely. Absolutely.
Yeah, we work through Premier in Nebraska, so Integrity.
Your name looks familiar. Your name looks familiar. I think I've seen it somewhere. Yeah. Well, so
keep up the good work, and I'm going to start kicking the tires and try to place some. If I can do some list bill cost sharing business and list bill with the HMA, the instant savings from group health will more than pay for it.
Absolutely.
309 with an $84 HMA. More obviously if you get a bigger HMA, but that's a pretty good.
Golden handcuffs work.
They do. They do.
Joe, last question.
Yeah, one of the big questions that I see a lot in Elliott, so I'd love to hear your explanation of it, is when people, they want to know what's happening with their money, right? So it's like, what are you doing with their money as they're building their savings in that first 2 years to 3 years? Like, they get to be really concerned as to like what's happening. And how do you explain that in simple forms to people?
It's simple. I'm doing nothing with their money. I'm keeping it in a cash custodial account, ready to pay for claims. There's no investment aspect of the HMA. If there was, I wouldn't be doing this job. If I was that smart. But when we built our product, when we built this 8 months ago, it was a very low interest rate environment. We didn't want the HMA to be lapse-based supported, so we're overcharging to overcompensate for a low interest rate environment. When we talk about the debit card, we have to keep tremendous amount of cash. Visa doesn't just give me a free ticket and say, sure, Elliott, print off all these debit cards and issue them to everyone. It doesn't work like that. There's cash in these accounts. So there's no investment scheme. There's no awesome bond portfolio that's yielding us great returns to generate this multiple benefit. It's all done through actuarial pooling of risk. Claims frequency versus claims cost is really our big play. The claims aren't that frequent as you think they are, and they're definitely not that costly. But our clients' money is being held in a bank with our money because we have to put our own reserves into these accounts to secure these prepaid debit cards. Remember, we don't issue these prepaid Visa debit cards. Actually, Goldman Sachs does now, and Stripe, but we're not allowed to. So there has to be enough cash on there. So we have our reserves with their cash sitting in the bank account waiting to be used in a custodial account. What's the word I'm looking for? Not collateral. Anyways, but it's an account that we can't touch because it's dedicated to be used for claims.
Escrow account. Thank you. It's exactly what it was, Charlie. An escrow account where we can't touch it, and it's there to be used for medical claims. Because once again, Visa just doesn't give little old Elliott special privileges. I wish they did, but they don't. So, Elliott, once again, this is your third or so appearance on Freedom Hub over the years, and thank you so much. Congratulations on giving the market, giving Americans a huge upgrade in out-of-pocket, which so many articles are saying are leading to medical bankruptcy, effective uninsurance. We hoped the HSA would do it, but really that's turned into a shelter to really build up funds for retirement. And you're now pretty much the best game, maybe the only game in town for out of pocket.
Oh, it's going to get even better with this long-term care. It's going to get even better with this long-term care. And then mark my words, I am going to go to Boss Mom and my business partner. What are we going to do for alternative medicine? If we can't put it on the card, let's at least do something for mail-in reimbursements. Let's give them at least $100, $200 a month to use for that.
Oh, wow. That's fantastic.
I'm going to do it. I mean, that's probably the best I can do because the merchant category codes, unless there's a better way to program that specific merchant category code into our card, it would be hard to add to the card. We would do it for reimbursement and save 50% there. I'm going to lobby for it. I'm going to lobby Boss.
Thank you, Elliott. Thank you.
You're welcome.
And when do we have
I'm a believer
access?
like you, Joe.
And when do we have access to the long-term care?
I'm hoping next 3 months. Everything's we're building.
Yeah, it'll take time. We'll revisit that. In chat is the link to learn more about HMAs. If you are an agent and want to sell them, we can get you signed up too as well. You know how to reach me. And Joe, hopefully. Elliott, thanks a lot, buddy. We'll see you soon.
Hey, guys. All right, guys, take care.
So what about your wealth? If your money could actually talk to you, would you listen to it? Well, with the DNA Network Academy, your money actually can talk to you. And it's going to tell you just what it told this client. This family had over 24 debts, mortgages, car loans, the works. They were on track to take 20 years to pay it all off and instead did it in 8.5. Plus, they did it without refinancing, making more money, or even changing their lifestyle. So find out for yourself with a free analysis that is completely confidential. No personal information, no social security numbers, no credit checks, none of that nonsense. But what is exciting is that the outcome of that report you receive is a guaranteed outcome for you. To get that report, head on over to bit.ly/debt2wealth. You will arrive at this simple form. Fill it in as simple as lender number 1 and credit card number 2. What really matters is the accuracy of your numbers. You'll be able to see that if instead of 20 years or whatever your number is, that you may actually be out of debt and on your way to wealth in as little as 6.3 years like this client.